Good morning, ladies and gentlemen, and welcome to the Corero Network Security PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted any time via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Lionel Chiminski, CEO, and Neil Pritchard, CFO of Corero Network Security PLC. Good morning.
Good morning. Thank you for spending time with us today. That's really appreciated. So we published our first half 2021 results yesterday, and would like to take you through this presentation to basically describe what we announced, spend some time with you around the strategy and how we see the market and the outlook. So what I suggest to do is first to go through a company background, speak about the H1 highlights, which we announced. Then Neil will spend some time with you on the financials. We'll go very quickly through the solution, the differentiators, and the roadmap, explaining how we stand out versus the competition. We'll describe to you what is our strategy for growth and what is the progress versus that strategy, and then a short wrap-up at the end of the presentation. So once again, thank you for spending the time with us. So for those who don't know us, Corero Network Security is a publicly traded company. We're traded on the London Stock Exchange, on the M market. We are headquartered in London, but we have offices and operations in Boston and in Edinburgh. We are 100% focused on DDoS mitigation. We are the leader in real-time, very high performance, automatic DDoS. And we have an associated, network of, network management facilities and analytics facilities. The customers we are addressing are mostly the service providers. They are the hosting providers. We do lots of data centers and colocation, edge providers like tower companies. We do enterprise mostly through partnerships. And there are few segments where we're very strong, like gaming and utilities. Company has been around for 23 years, but we decided to focus on DDoS only about 8 years ago. We have now solutions deployed among thousands of organizations in about 42 countries. And despite the fact that we are very, very customer-centric, we invest a lot in R&D. So in the first half of the year, 2021, we invested about 21% of our top line in R&D. I think that's very important when you're a company of profile and want to stay at the edge of the technology. We have some very interesting partnership with companies like Juniper and GTT, and we'll spend more time around that at a later stage today. We also have some technology partnership with Splunk and with Newstar. I'm sure that most of you know what DDoS is, but in few words, DDoS is when an attacker is sending unwanted flood of traffic to either a web, a network, or a server in order to slow down those targets or to make them collapse. And what we can see on the market is that those attacks are getting more sophisticated in several manners. You have DDoS attackers that are basically using multi-vectors. They can use the main network. They can also use anything that has an IP address. They're becoming more recurring, and they could be very small, but also very big. Just a few words about the DDoS market. So the DDoS market, if you look at it as a whole, it's a market that is about $2.7 billion. It's a market that is growing roughly 14% per year. And it's split in three domains. You have the hardware or appliance solutions, which is the domain where we play. That's about 46%. You have software-only solutions, that's 28%, and services, that's 25%. If we're trying to take this TAM and look at what is the serviceable, addressable market for us, it's basically in the range of $270 million. This is where we've looked at what is the segment that, or what are the segments that are our sweet spot. And this is mostly, as I described, service providers, tier 2, tier 3, data centers. We've also looked at the geographies where we are strong and can have access. For instance, we didn't take China in that SAM. And we've looked at the profile of customers that we could address. So that is about 270 million. For you to get an order of magnitude of what DDoS attacks represent, there's about 28,000 DDoS attacks per day. So that's a lot. Small attacks, large attacks, and that could be very impactful for our customers. That has grown significantly during the COVID period. Last year, for instance, it was up 20-25%. So very important to have that in mind. It's also very important to understand why customers are buying DDoS protection solution. I mean, they want to do two things. They want to make sure that they can have a business continuity, so not having their network, web servers, or websites being slowed down or being attacked and collapse. So that's one. So the first one is to assure business continuity. The other one is to make sure that they could generate additional revenue by providing DDoS protection to their customers, and mostly enterprise customers. So you have lots of service providers that are obviously proposing capacity, connectivity to their customers, and they're adding on top of that some DDoS protection so that they can generate incremental revenue. In terms of business model, we have, I would say, 4 types of solutions. The first one is what we call TDS, which is our SmartWall threat defense systems. This is a solution that we're selling direct. That's basically appliances and associated software going from 10 to 100 gig and also addressing cloud. We have a solution that we've developed within the partnership that we have with Juniper, which is basically to add software together with the routers that Juniper sells to their customers and protecting their customers with the DDoS protection solution. We have a solution that we're selling on the cloud together with a partner called Newstar. And then we have a whole range of services that are pre-sale services and post-sale services like, deployment, maintenance, support, managed services. In terms of how we approach the market direct. So we have our own sales team with account executives and pre-sales engineers selling directly to customers. We have the partnerships that I mentioned with Juniper and GTT and Newstar. So basically, Juniper is selling our solutions to their customers. GTT is selling their solution to their customers. When they sell connectivity, as I was mentioning, they're adding DDoS protection. So that's something that is a good way to reach customers that we would not reach direct. And then we have channels, which is composed of agents, composed of distributors, could be local distributors or global distributors, and then a whole range of resellers, mostly local. In terms of customer segments, I already spoke about the segments that we're addressing. In terms of source of revenue in the business model, we are getting revenue from a CapEx model. That's the first part. So we're selling appliances and perpetual license. We're getting revenue from services, could be pre-sales, post-sales services. We're selling as well DDoS as a service. We're also having a revenue share model. This is what we have, for instance, with GTT. So when GTT is selling DDoS services to their customers, we're sharing their revenue. And then we have the term licenses. Customers, quite impressive for a company or profile. So we're doing business in about 42, 43 countries. We are active in all the continents. We are protecting either directly or through our partnership thousands of organizations, and we acquired many new countries in 2020, roughly 9 of them. We also have quite a lot of new potential countries in the pipeline. You see here a representation of few of our customers. Obviously, we have many more than that, but those are names in the several segments that I described. So what's the investment opportunity? So first, we are operating in a large and in a high growth market. I mentioned a TAM of 2.7 million, a SAM of about 270 million, 2.7 billion TAM, 270 million SAM, and the market is growing at 40% per year. There are some trends on the market like IoT and high connectivity, 5G, higher capacities, mesh networks, cloud, that are also providing some good opportunities for expansion for the company. We believe in terms of technology that we have the best ratio performance over TCO in the industry. We mitigate, as I said, automatically with which is a strong differentiator, the DDoS attacks in few seconds, and this is faster than any other solution on the market. In terms of IP, all is done in-house, except what I mentioned about the partnership on the analytics with Splunk, but all the rest is developed in-house. And that's important so that we don't have any significant dependency versus third parties or royalties to pay. As I said, we are 100% specialized on DDoS. We've been specialized on DDoS for the last 8 years, and we've spent roughly 35 million in R&D so far. As I mentioned, we are investing about 20% of our top line in R&D every year. I mentioned the customers base that we have, so very solid ones. Once again, for a company of profile, we have some pretty big logos there. Thousands of organizations, 40 countries, lots of recurring revenue, about 60%. You saw the numbers around ARR, and it's about 11.2 million, which is significant. Our customers are very loyal. They've been buying from us since we started to do business with them. And obviously, not only we're helping them to protect their network, but as I said, to generate more revenue, which is a real opportunity for especially service providers. There's lots of competition among service providers, and everybody's trying to identify new ways of generating revenue, and this is one way to do so. For a company our size, same thing, a very impressive SOC, so service and support for our customers, worldwide presence. We are doing, services, for instance, as far as Australia. We have customers in Australia. We are monitoring the network there. We do pre-sales, post-sales services, high level of compatibility with the equipment that our customers have. I talked about Juniper, but we are also operating in different environments when people have Cisco, when people have Arista or Huawei technologies. We have mitigated last year, just to give you another impactful figure, we've mitigated about 400,000 DDoS attacks in 2020. And then we're global, but we have a very local approach. Because we are mostly supplying software, we can very quickly and easily deploy on the field. So when a customer has attacks, when a customer is coming to us and say, I need a solution, we can deploy that very, very quickly. In terms of way to scale, we have, as I said, some important partnership. On the customer front, we are also adding some channels, and then we have our direct sales force. Our enhanced strategy has been built around growing the top line. I talk about that at the end of the presentation. And then in terms of manufacturing, we are using a subcontractor for that. So we don't have to have the in-house supply constraints. We have a good relationship with our supplier with a good planning tool. And then last but not least, and you'll see that when we talk about the financials, we have a very healthy P&L. So we have very high growth margins, anywhere between 75 to 85%. There's lots of recurring business, so we can start a new year with already some almost guaranteed revenue, and we are very smart on how we spend the money. We have a very skilled management team with decades of experience, either in technology or more precisely in cyber security. So very quickly on the highlights, and I will then hand over to Neil, who will go in more details. So we grew order intake by 13%, which is nice, almost reaching 9 million. We did about 8 last year, same period. Revenue has grown 34% to 8.3 million. EBITDA is progressing significantly, and you'll see the details. And then the ARR has grown from 8.8 last year to about 11.2 at the end of the first half of this year. We had a number of records that we broke. The best order intake for H1 at 8.9 million. The best revenue level for H1 at 8.3 million. Positive EBITDA, record ARR. The number of new customers is very important. We had 20 new customers first half of this year, 80 versus 18 first half of last year, and almost half of that is coming from Juniper. So the partnership, as I said, is very important, is working well, and we're building a lot on that partnership for future growth. We made some good progress on the growth strategy that we've implemented last year, beginning of last year. We continue to invest significantly in sales and marketing, and we continue to invest in R&D to make sure that we're staying at the leading edge of the technology. So that's basically it about the highlights. I will now pass and hand out the floor to Neil, who's going to take you through the financials.
Superb. Thanks very much, Lionel. Good morning, ladies and gentlemen. Thank you very much for attending, and it's good to be here. Just 3 or 4 slides from me, really. First of all, just this highlights. I will go into each element of this probably into varying degrees, but certainly in more depth on the following slides, which will break down between P&L, cash flow bridge, and balance sheet as well in that order. But first, just on the overall highlights, some of which we've touched on, but just to re-emphasize, and others just to explain a little bit further. So first of all, as Lionel was saying, number of records, and certainly for us, order intake or bookings, as we sometimes call it, that's also a record level beyond the record for last half last year as well. So, and it's pleasing to see continued development and improvement on the revenue side, up 34%. That's included sort of really expansion across all disclosed, revenue streams in terms of how we split that out to the outside world, and each level increasing over and above the previous half there. So very good to see. Very important, and really a reflection of underlying trajectory, are annualized recurring revenues, which is the definition is further down there to take at your leisure, is that continue to increase very nicely indeed. As Lionel said, up 2.4 million, again across all components of that, so up 27%, half on half. The overall net cash, actually for the position at the half, did improve against the previous half. That breaks down between a gross cash level of 8.8 million against 6.2 for the previous half. Net debt was a little bit higher at 3.7 compared to 2.9. There are some roundings in and around there, but essentially 1.8 million and some FX as well, but effectively 1.8 million over and above the previous half. And then EBITDA, now that measure there is really very much just if you like, the plain vanilla definition that you'd have on EBITDA, and that actually is positive for the first time. There are some influences, and in full disclosure, that does include a credit on a COVID loan alleviation forgiveness, which I'll come back to, although also does reflect sort of slightly more adverse FX as well. So very pleasing to see crossing that sort of particular inflection point. And then we set out a number of EBITDA measures, but for us, where we go through further adjusted for things like share-based payments, also for depreciation on assets that we own but we revenue share with GTT. So therefore, that the depreciation that goes through cost of sales, that also improved to a considerable 0.6 as well. So very nice to see that continued improvement. Just going into the P&L in a little bit more detail here. On the revenue, as we say, that's gone up about 2.1 million or 34% over the previous period with those revenue record bookings. The breakdown there, approximately 40% is around our software and appliances. 23%, I think, was in this half was DDoS protection as a service. That's very much providing our service, for hire, a little bit like the Netflix model, as I always say. And so, and then the remainder on maintenance and support revenues as well. Now, in terms of the geographical split, in the first half, it was around about 70% in North America and Americas, 14% in EMEA, and a pleasing increase, 17% in the APAC as well. So those APAC is a sort of a newer territory for us historically, as Lionel was talking about our operations in the UK and the US. That has continued to increase, but actually again increases in many geographies, as Lionel mentioned. Overall gross profit improvement, well, that's actually probably at a high. It's at 84%, really, as the commentary there refers to. It was about an exit level about 81% in the second half of last year. It does compare very favorably to the prior year of 75. It's really a mix effect rather than anything more pronounced, where we have more sales of software only without the associated cost of sales of perhaps some hardware or appliance costs, if you like, within that obviously is a has a higher margin in that software only sort of element, and that includes, for example, Juniper sales as well. In the second half, what tends to happen is, that there's certainly more sales made and more activity by our customers in the second half, and that tends to also be sometimes at keener pricing. So overall OPEX, overall it's actually about 15% higher. The underlying, if you take out depreciation and amortization there of about 1.1 million in the first half, gives a sort of a 23% increase. Really, that comes back down to our continued investment in sales and marketing, more of which we'll cover in the strategy. So I won't go too much into that. Some increased central charges as well, but also, in terms of it's probably still worth pointing out that depreciation and amortization was slightly lower as well to offset against that. We have had some benefit within some lower sort of travel accommodation costs and so on. And then finally, there was an FX cost of exchange gain loss, if you like, of about 0.2 in the period. That compares to a 0.8 gain in the previous half year. So that's quite an adverse swing. So it was good that we were able to navigate through that as well. Partly to offset against, as you can see, just in terms of lower down in the P&L, we've got other income. So I mentioned that our US subsidiary, we took out a COVID alleviation loan in the US last May. And at the end of January, we were fortunate enough to, as in common with many other companies, have that forgiven. So you'll see that does disappear out of the borrowings number and is a credit to the P&L. And that's shown separately here for full disclosure. And then finally, at the loss after taxation level and so on, and just as a key summary, across all those metrics, got EBITDA profitability, with those discussions around the other income, but also the FX as well. We have more than halved our loss after taxation, which obviously is on our trajectory to go further there on there. And we've had that significant ARR further increase, and we hope to improve on all those metrics, and with the operational gearing leading to a disproportionate improvement in profitability as well. Just moving on to the group cash and the group cash flow. Overall, this is just taking in the top, just as a metric, just to be perfectly clear here. What we're doing is we're starting off from the gross cash position at the year end to the half year, and hence the fall of 1.3. And that's what's obviously then explained through the first half cash flow. And so what we then do is talk about what happened in that first half in that lower box there. So first of all, we did nevertheless, despite the improved EBITDA, historically best levels, we still at the loss before tax level registered a loss. So we start from that position. We add back the non-cash movements, which as you can see there is about 0.9 for the amortization development costs. Depreciation 0.4. That's different to the depreciation saw in the P&L and the OPEX, because about 0.2 of that is in cash cost of sales and 0.2 is in OPEX. Share-based payments there, ever so slightly up at just under the 0.3 mark. And then we had that loan forgiveness level. Obviously, when that came in, it was a cash flow inflow, but this is registered as an outflow as an accounting element of that. With a net movement in working capital, that is an outflow of 1.8. Not very much movement on inventory, about 0.5 on debtors, and but on creditors, an offset of about 2.3, and large component that competitor. So really, the effect of that is, first of all, creditors or payables in new parlance is really both increased due to increased levels of business activity, the same with debtors receivables, but also we did flag in the latter part of last year, we took in a significant inflow on one deal, and actually the outflow for that, for which in terms of payments to suppliers and so forth would be in Q1. We flagged that before, and that's what's happened now. It will then normalize from here on in. So the next measure is really, we did take out some new borrowings at equal or better rates, taking opportunity there with our current provider, having evaluated that. And so that was a new 3 million facility, of which we've drawn down 2 on term loan and 1 million undrawn on the revolving credit facility there. And but against that, we have actually repaid the existing loan to term and to the arrangements, and that's what you see a couple of blocks over. We continue to invest, as Lionel mentioned, in a comprehensive way, in an agile way, in our solutions, and so that's another 0.9 there. You see investment in D. That's the cash flow. So that's the measure for those of you to take to add if you want to get to the cash EBITDA. And then capex really a little bit lower than normal, but about 0.2 on other fixed asset spend. Not very much else in terms of the other reconciling items at all. Finally, just to move on to the balance sheet, to give you and really just to pick out any significant movements there. Our overall intangible capital development, in terms of what's actually capitalized, so we actually had those 0.9 of additions you just saw on the cash flow, but against that amortization of 1.1. So in general, our amortization, and this was the case also for 2020, tends to more than offset any additions to the balance sheet of any intangibles, partly because there was a lot of upfront investment in some of the platforms in terms of the cost of investment 7 or 8 years ago when we decided to focus specifically on DDoS. So so there isn't a sort of that level of accumulation in the balance sheet that perhaps might be typical of some other early stage technology companies. Property, plant, and equipment is very, very low, even though we've had that little bit more of those 0.2 of assets, just to point out that that's more than fully offset by other fully depreciated assets. So very little net movement there. The inventory is real movement. Overall, trade and receivables, as I said, actually increased with the level of business and a small element on deferred commissions as we do more business. And then on payables, also increased with the levels of business activity and other accrued costs. In overall terms, deferred income has got bigger because, again, that represents more 3-year new upgrade, add-on and renewals businesses. So basically that will increase as you know, the level of trading has increased as well. And there you see the overall net wrapped up movement in terms of the increase in borrowings, and the split is provided there. Overall, net assets are lower than the previous half, but if you take H2 2020, they're broadly similar to where the H1 figures were for the previous year in 2020. H2 is always bigger for us, and so that's a sort of level. Overall, gross cash is better by 2.6, and net cash is higher against the, as I say, the previous half as well by 1.1. And with that, I will hand over now back to Lionel. Thank you very much.
Thank you, Neil. So the last part of the presentation is going to address the solution and the roadmap. We're going to talk to you about how we differentiate versus competitors, and then give you an update on our strategy for growth that we've implemented since last year. I will take this occasion, I read a few of the questions, I will take this occasion to answer to some of the questions that you guys asked while talking about those points. So in terms of solutions, we can do 3 things. First thing is, as I described, we can sell as a CapEx model appliances and associated software. This is what we call the TDS solution. We can sell as well through our partnership with Juniper, so adding DDoS protection on top of the routers functionality that Juniper is providing. That's the TDD. And then through the partnership with Newstar, we can address customers that need a cloud solution together with an on-prem solution. So that is the different types of solutions that we have. In terms of on-prem solution, which is really our sweet spot, we probably have the broadest portfolio of products in the industry. And that comes into several flavors. The first flavor is when you are protecting every single link. So basically you put your detectors and mitigators in front of the routers to have an always on full protection for each of your links. You can have, that's the inline, you can have the data pass approach, which is basically you put your detector or appliance after the router so that you can select the customers or the ones you want to protect versus the ones you don't want to protect. There is this edge solution, which is the one that we are offering together with Juniper, where you're providing DDoS protection at the edge of the network on the routers. And then a new product or new solution that we announced a couple months ago, which is basically detect and redirect. So what you guys might be familiar with as scrubbing, which is something that some of our competitors are doing, where basically you decide to mitigate only a portion of the traffic. And basically you do as well sampling. And basically the big advantage of that is that you can deploy your solution at a cost-effective manner on large networks. In terms of roadmap, as I mentioned, we just introduced this detect and redirect, so-called ETD scrubbing solution a few months ago. We are looking at trends that are in the global environment around 5G, IoT, edge compute, next generation of connectivity, and all the innovation around DDoS. So that's an area where, as I said, we're spending huge amount of time, effort, and money. There are lots of tracks within the company to make sure that we stay at the leading edge of the technology. So how do we differentiate versus competitors? So first I will highlight the domains where we have some very strong differentiation. And I will mention, you see 6 of them here, but I will mention the key ones. So clearly, speed of detection and mitigation is one of our key strengths. We detect and mitigate attacks in seconds, 3, 4, 5 seconds, depending. And that's probably faster than any other solution in the market. Second thing, which is very important, is that we are doing that automatically. So it doesn't require in terms of manpower that the customers have to deploy. It doesn't require to have an army of people. In 95% plus, all the detection and mitigation is done automatically. And the third one, because of our experience, because of our know-how, the fact we've been 8 years working on DDoS, we have a very accurate and sophisticated deep packet inspection technology. So that allows us to detect and mitigate not only the big attacks, but also the small attacks. Sometimes people are good at detecting the big attacks, but they're not good at detecting the small ones. We are able to detect the small and the big one. We have a scalable business model, so we can protect our customers, when they have small capacity, but also when they increase in capacity in a very cost-effective manner, and then a world-class support. So there was a question about competitors coming from Peter. So that's a question that I'm going to answer by showing this slide. So if you look at Corero versus our competitors, and obviously I haven't mentioned the names there, but you see 2 categories of competitors, or 3 categories. You see people that are 100% dedicated on DDoS, detection and mitigation. This is our case. So this is why clearly we have green boxes there, because we're doing DDoS and only DDoS. The second category are competitors that are doing DDoS and other solutions. And the third categories are people that are doing other solutions and they add some DDoS in their solution. So when you ask your question, Peter D, that's the case of the companies that you mentioned. So Peter was asking about the differentiators, which I highlighted, the way we stand out versus competition. I think if I was to summarize, we're probably the only company which is 100% specialized on DDoS that has the level of performance and the competitive TCO on the market. One thing that I wanted to mention, and I think that basically matches what we see on the market and how we respond to that. If you're looking at the trends in terms of DDoS attacks, so there are more and more attackers that are attacking the same target several times. And it's very important, and this is about 13% increase in those multi-vector attacks. And it's very important to have an automatic system, otherwise you will need, as I said, to have an army of people at the customer site to fight against those DDoS attacks. So that's one. The fact that 86% of the attacks are, let's say, attacks that are being sent in very short time, so 86% of the attacks are below 10 minutes, you need to have something that is extremely precise and quick to mitigate, because if it takes a long time to detect and mitigate, the attack would have been gone through, your network would have been slowed down or would collapse before you would have been able to detect and mitigate those attacks. So the fact that we're doing that in few seconds is extremely important. 97% of the attacks are small attacks in terms of numbers. So it's important to have a very precise, very sophisticated deep packet inspection technology to address that. And same thing, lots of attacks are being repeated. So the fact that you're automatic helps you in minimizing your effort in headcounts in detecting, mitigating those attacks. So that's on the competition. Now I wanted to share with you where we stand versus our strategy for growth. So as I said, we've been 8 years in that domain. For the first 7 years, we spent huge amount of time to build a very solid portfolio of solutions, very strong platform that is the base for all our solutions. We've been able to establish and develop a very strong base of customers. We have hundreds of customers, very prestigious names, very important logos in all the domains. And then we built some very solid team. What we've implemented beginning of last year in terms of enhanced strategy is really focused around growing the top line. So making sure that we're putting all the efforts, all the money to grow bookings, to grow revenue. And in order to do that, we have implemented, and I'm sure you guys read around that strategy, we have implemented a 6-pillar strategy based around a customer-first mindset. So to increase our international presence, basically replicating what we've been doing in the US and in Europe, which are basically the largest geographies for us, leveraging on existing partnership with Juniper and with GTT and developing new ones, a high focus or a focus on large accounts, major enterprises, tier 1 operators, some resources and focus around services, selling more services to our customers, pre-sales and post-sales, not only because it's high margin, but also it's increasing the stickiness with our customers. Obviously, all of that has been underpinned by a very ambitious demand generation program. So we've done lots of campaigns, webinars, either direct or through our partners. And then, as I said, continue to increase in R&D in order to keep, maintain our technology leadership. So let me give you an update on what we achieved in the first half against that 6-pillar strategy. So increase our international presence. And during the first half, we had some significant wins in Australia, Germany, France. Japan is an interesting one, doing well there. We got some business in China, Brazil, Canada, and the US. So we expanded in more geographies, or we generated recurring business in existing geographies. We've signed new partners in new geographies or in existing geographies. Those could be agents, could be VARs, could be distributors. That's important. We hired more resources, so dedicated full-time employees, resources in APAC. That's a market that is supposed to be 35% of the worldwide market, so for DDoS protection. So that's an important one. We're going to add more resources there. We've added more resources recently in EMEA. And then when I'm looking at the pipeline is solid, and we have potentially 10 new countries in the pipeline. In terms of partnership, so as you know, the one with Juniper is extremely important. Almost half of the business that we grew, almost half of the new customers that we got in the first half of the year is coming from Juniper. We're also getting more and more customers with GTT, and we are making good progress in securing new partners. I will take this occasion to answer to the question that was posed by Andy M. Andy was asking if we're looking to create more partnerships such as Juniper. So basically the answer is clearly yes. We are looking at having more partnership like Juniper. So first, we're not looking at having a partnership with the competitors of Juniper. I told you that we could deploy our solutions in a Cisco environment, a Arista environment, Huawei environment, but we're not looking at building a partnership, strategic partnership with competitors of Juniper. That being said, there are other network equipment suppliers that are not competing with Juniper, with whom we have engaged some discussion. So that's one aspect of it. The other aspect of it is around system integrators. System integrators are providing a global ecosystem to their customers, including cybersecurity and DDoS protection. So we have engaged discussions with few of them, global ones, and we're making some progress. So just wanted to give you a quick update on that one. Intensify our presence among large accounts. So this is something that we're doing either with a direct approach, but as I said, we're mostly focused on tier 2, tier 3. We're also doing that with Juniper. So as you know, Juniper is present among a huge number of very large accounts, tier ones. We're doing that as well through our partnership with GTT and some other partners that have access to that. There's been 20 new customers in H1, some important new logos, and we have some pretty exciting logos, new logos potential in the pipeline. Very quickly, services, that's important for us, high gross margin, increasing stickiness with our customers. We're looking at expanding the number of services that we can provide. We are looking at systematizing, so making them more systematic when we're making quotation to our customers. That's important. We've done lots of campaigns around our solutions, the benefits of our solutions, either direct or with partners. We have some specific campaigns with Juniper. We have specific campaigns with GTT. We're doing some local campaigns with local VARs or distributors. And we've seen that there was a good uptake on the digital advertising efforts. So that's an area where we're going to spend more money. And then in terms of innovation, clearly, as I said many times, we're investing a lot. We launched that ETD solution recently. Just to give you an order of magnitude, this is something that was one of the tracks that we had in our technology development tracks. The sales team came to us with a quantified list of opportunities beginning of this year, and within 6 months we were able to develop and introduce the product on the market, which currently we are running several proof of concept with customers for that product. So it looks like it was the right move to make. So that's basically what I wanted to mention to you. So just as a summary, and then we can take a few questions. There are lots of questions. We will take those. So first, we have performed nicely last year. You saw the numbers. We are performing as per the expectation this first half of the year. That's important. And we have built the basis for the enhanced strategy beginning of last year that we are now implementing and seeing the fruits. If I'm looking at the future, the outlook, so clearly, I mean, there's a high need. You saw the market size. There's a high need for DDoS mitigation solutions. Because of the COVID environment, it's been increased. People working from home were using more internet, and then customers were more targeted by attackers. So COVID has created a positive uptake for us. That being said, we are very, very conscious that there might be some side effect as well of COVID. So around the ability of companies to invest or the time it takes for companies to take decision. For the time being, we're seeing some momentum, but we're monitoring that tightly, as we are monitoring what's going on the supply chain shortages. You know that there is some constraints on the semiconductors. So despite the fact that we have mostly software in our solutions, we also have some appliances, but we have a good relationship with our manufacturer, and we are doing a good exercise in planning what we're going to need. So in front of that demand, we have a very solid solution, as I explained. We're making it evolve. We're making it progress. It has a great performance. It has, and we're seeing that when we're bidding against competitors. It has a very cost-effective efficiency, and that's very important. We are very, very much focused, as I said, around growing the top line, more resources in sales, more customers driven, processes with a starting point being the market and customers. So that's all positive. We had, as I said, good performance in 2020, good performance in first half of the year. The pipeline is solid. That's something that we are all monitoring very, very tightly. We have a solid pipeline. So we expect 2021 to be in line with the market expectation and continue to grow. So that's basically it. I just wanted to thank you for your time. We have probably 5 minutes for questions. So we'll pick few questions, and then if we cannot answer all the questions, feel free to reach out. We'll be happy to spend time with you guys.
Lynn, Neil, thank you, as I say, for the presentation. The guys can please continue to submit your questions, because all questions that are submitted today, Lionel, you'll be able to review later if we don't get round to them anyway.
Sure.
We did have a couple of pre-submitted questions. I don't know if you want to touch on those or just go straight into the live ones, and we can review everything a little bit later on the basis of time.
Sure.
Shall I take the first one, Lionel, just on the revenue growth one? Yeah, just so we had a question regarding. Question said 6 months on 6 months revenue growth has been flat. Are you anticipating revenue to remain flat over the remaining 6 months of this year and into the future, or do you see revenue starting to grow again? So, I mean, as I've covered, first of all, just for purposes of clarity, the H1 first half results now we're just talking about the revenue growth over the previous half was 34% increase. So I don't know whether you're then talking about the sequential half on half. So the second half of last year showed revenue of around about 10.7 against 8.3 in the first half. So maybe things are being slightly read into there. But I mean, effectively, Corero tends to have a higher half two than higher half one. And within the half two, the biggest quarter is calendar Q4. And that's really in line with customer budget years, IT spending budgets in line with their calendar year ends. Obviously, we have a historically, a bigger base in the US where they work to calendar years. So no, consequently, we don't anticipate revenues being flat in the remaining 6 months of the year. And I wouldn't draw parallels between the trends in H2, H1. They are different. So, the market guidance for this year is around 21.9 for the full year in terms of revenue. And the current market guidance for 2022 is a further sort of around about 30% growth rate as well in revenue, just to be clear.
Good. Thanks, Neil. I will pick the second pre-submitted question, which was, Internet security is a fast-moving technology. Are your products still at the cutting edge of dealing with DDoS attacks? And what action do you take to ensure you will continue to have the best products in the field? So yes, we are at the cutting edge, and we want to remain at the cutting edge. As I said, we are investing a lot in R&D. We are taking as a starting point the customers and market requirements. That's important. I mean, it's an important philosophy to not only develop products because they look good on the paper, but to develop products more because they are needed by the market. So this is how we develop our roadmap. This is how we develop the products. We have several tracks internally to make sure we capture what is needed on the market. We have obviously regular discussions with our customers, but we have more formal forums to basically consolidate what is needed on the market. And then, developing products based on priorities, what is demanded the most, what we're going to sell the most, and the return on investment. So that's extremely important. We want to remain, and I think, being a company our size and our profile, it's very important to remain at the edge of the technology. It's also very important, and I gave you an example on ETD, very important to develop good products and quicker than the others. I think that's one of the key differentiators that we have. We are very flexible, very agile. We have a very, very solid teams of engineers, product line management, and that allows us to do things that some of our competitors cannot do. And that's the advantage as well of being specialized. So that's the way I would answer that question. The other part which is important around that, developing products is great, but also you need to make sure that you have a very solid operations team, SOC team, to basically maintain the link with the customers. And same thing, I'm very impressed with the teams that we have, with the level of support that we're providing to our customers once the product have been developed, sold, and deployed. I don't know, Neil, if there is one or two questions that you want. There are lots of questions on the financial side, if you want to take one or two. We still have 5 minutes to go, and I will take one more.
There was one regarding RNSs on wins and things like that. It's fair to say that perhaps we need to get a few more out really in the second half. So we'll focus on that. We've had a number of other press releases outside RNSs actually regarding things like ETD that you may not have seen. So we'll take that feedback on board and look to sort of elevate the communications in the second half. Obviously, that is sometimes dependent on the confidentiality of some customers. Some customers don't necessarily want always their name to be highlighted and so on. So there is an element of discussing that before on some of these things before we can go out and disclose too many things. But so that's that one. On the EBITDA, there was one around the maybe a couple on the cash EBITDA. So I mean, it also depends, of course, where your starting point is. I mean, if you said our plain vanilla, as I mentioned earlier, EBITDA of 0.1, then in terms of the actual cash spend, as I mentioned earlier, that was about 0.9. So then you'd be at a minus 0.8 level. But if you then took last year's, I think you're more or less at the minus 2 million. So you're obviously comparing still a different significant delta between the two. But that would be my definition in terms of a cash EBITDA in terms of the capitalization of development costs that I know some people take. Of course, some people also talk about other elements in terms of spend on R as opposed to spend on D. So these things, unfortunately, are never sort of fully sort of explained by everyone in quite the same way. But I think that's probably the closest plain vanilla definition and adjustment of that I can give you.
There's one question from, thanks Neil. There's one question that I'd like to take coming from Peter D. Peter is asking, do many customers change from one DDoS prevention solution to another? It seems like there may be a lot of inertia where corporates stay with an existing solution. Also, are the numbers of corporates without a solution sufficient for your growth over the next few years? So that's a great question. So normally when you have a large customer, when they have an incumbent, it's pretty comfortable for them to stay with an existing vendor. And, we have competitors that are solid competitors, two main ones, and they have good solutions and they are well established. So clearly, unless there's a problem, and that happened with one of them, with one specific customers, normally they stay with the solution that they have if it gives them satisfaction. That being said, operators or service providers are doing two things with DDoS protection solutions. So the first thing is they're protecting their own network. And generally for that, they have an incumbent. But they also provide DDoS protection to their customers. And that's a way for them to generate incremental revenue. There's been many cases where we've been asked by a service provider who has an existing vendor on their network protection. We've been asked to provide a solution for their enterprise customers. So that's a case that happens. You also have some customers that have a multi-supplier approach. And then when you think about the system integrators, they are more like open to have several solutions. And we're having discussions with some of them in that respect. As far as is there enough market for us to grow? So clearly you saw the TAM, $2.7 billion. You saw the SAM, $270 million. The way we've looked at the SAM is we've looked at areas where it was mostly our top two competitors on tier ones. So that's not part of the 270 million. So the 270 million is our sweet spot. It's areas where the incumbents are not in there or are not focused on that. And it's geographies where we can address. So, you see, when you're a company that did 17 million last year in revenue with a SAM, serviceable addressable market, that is 270 million, there's a lot we can grab there. So I think by executing the strategy, by being more customer-centric, focus on the top line, there's still some room for growth, as you can see. So just wanted to end the discussion on that one. I know we're running at the end of the
I was going to say, Neil, you're literally coming up to time. So we have got a number of questions that have come through, and I'd like to thank all the investors for sending those. Of course, the company will review all questions submitted today, and we'll publish those back out to you and responses where appropriate to do so. Just on that basis, Lionel, perhaps I could just ask you for a few final words just to conclude, and then we can redirect the attendees to give you some feedback.
Yeah, sure. So, well, first, thank you everybody for attending. It's been a pleasure. We are living in exciting times that have represented challenges but opportunities. I think and we've demonstrated that with our performance in 2020 and first half of 2021. I think we are implementing the right initiatives to make sure that we grow, we continue to grow, and we continue to grab market share, which is important. It is an exciting time for all of us, and looking forward to the future.
That's absolutely fantastic. Lionel, Neil, thanks again for updating investors today. Please could ask investors not to end this session. It should be automatically redirected for your opportunity to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the team. On behalf of the management team of Corero Network Security PLC, thank you for attending today's session. That concludes the presentation. Good morning.
Thank you very much, everybody.